Welcome to our 2020 ER Series recap video, presented by Progression Brewing. Take a deep breath. Next up is our $50 account challenge.
We are wrapping up week 4 of our ER series, and we're going to do an overall recap of the entire ER series that we just ran. 4 weeks in total. What we have for you this week is we have about 12 plays that we ran on here. And then we're going to go over those plays, what we chose on those, the accuracy, the profit, the losers that we had on that, and then we're going to jump into an overall recap of the entire ER series itself. We're going to explain why we chose what we chose, why we found more success on higher volatility, higher price names than we did on these lower price names, and just the general thought process that we have when we go into creating each play each and every day of the past 4 weeks. And you know, it can be very daunting and very tiring, and you just kind of get drained, and sometimes you find yourself just recreating the same plays over and over, and you kind of have to have that readjustment. You have to walk away for a little bit and then reassess when it comes to this. So let's just do a quick little recap of week 4 that is, and then we'll jump into the overall recap itself. For week 4, we ran 12 plays that were out there. We only nailed 5 of them at about 42% accuracy. It's not good, but what we have to do and what we have to realize when it comes to this is, did we limit our downside on this? All right, so as a winners, if you magically only took the winning plays, you would walk away with about $561, and this is per contract. And then if you took for magically only the losers, you'd walk away with negative $781. So the profit for the week, if you took all plays this week, one contract each, you're walking away about negative $200 when it comes to this. And then we ran plays that were on Disney, Activision, Roku, Beyond Meat, Take-Two, Space, Wynn Resorts. The main problem that we had when it came to this week is we're leading up into a giant shift. All the big names have reported. What you have is you have the digestion period, I call it, is taking in everything that was reported and putting it into the market. And that was the struggle, was you don't have the big names that you're waiting on, and you kind of know that you can play a stalling plays when it came to this. You're running your iron condors, running your iron butterflies, selling credit spreads when it came to this that typically have the high success rate that it does. What we tried to do this time is we got a little spicy when it came to things, and you know what? It just didn't work out the way that we wanted. And so just a quick little thing, the plays that we got hit on the most and the plays that just didn't work were the plays that we kind of swung for the fences on, or it just made a huge move that was just completely out of the realm of the implied move itself, or just, you know, maybe even reaching into a 2 standard deviation move when it came to this. So Datadog was one of them, and Datadog really smacked us in the face. What should have been turned out playing off of a wider than expected iron condor that played within the implied move itself, or excuse me, outside of the implied move itself, when should have nailed you $140 in the play, turned into a $263 loss when it came to that, because it dipped below that $80 mark down a little bit further. And then the other one was Wynn Resorts, and that's what kind of really hit us. And we thought, we took it from a technical side of the perspective, and the head and shoulders pattern that was there, typically a bearish signal when it came to this. And we said, all right, what we're going to do is we're going to run we're going to be buying an iron condor when it comes to this, which means that we want it to make giant moves in either direction and just not stall. And what ended up happening was it stalled, which is, it's a little shocking when it comes to it because of the pattern itself by nature. And you think, all right, it's either going to break below and it's just going to rocket below, or you know what, it's going to find support off that because of this great ER and then just rocket forward. And it said, you know what, we're just going to stall out. And that was actually our 2 biggest losses when it came to that. And those two combined for almost 80% of the losses when it came to that. So if you magically just didn't take those 2 plays, you're actually probably sitting pretty well. The other ones were, they were just, the one that I didn't like the most was Dropbox. All right, so what it was is when you run these calendar spreads and these, it was the NKLA, the new Tesla that's out there with the things, and you run these variable trades and you're trying to plot and plan an IV contraction or a drop. And when it comes to that, is you have to expect the move to play out, or you just get hit hard when it came to this. Now Dropbox was just the wrong direction. If we would have ran it in the opposite direction off of the implied move itself, it would have worked out great. taking instead of taking the 25 calendar spread that we took up, which would be reaching the implied move this week and then jumping into next week with an at the money strike and just continuing riding that expansion and riding that move higher and collecting off that. If we just moved it to the opposite side and took a 23, it would be sitting absolutely perfectly when it came to that. The one I didn't like was the NKLA when it came to this, and what it did is just stalled again. So what you need is, what we did is we sold strangle this week, meaning that as long as it doesn't move between 30 and 50, we collect off that. That's great. But what happened to the next week that we took on the August 14th is the crush that happened, the IV crush, when that dropped, and then all of a sudden you're already down into next week. So you need it to hang around those levels of the 30 and 50 in order to make sure that it maximizes that. And then as it goes into the next week, it continues to push off that, and then it keeps on inflating that IV higher because it's making that move that you did, and it just didn't work out. So that's what we have for this week. A lot of tiny little losers and a couple tiny wins when it came to that. But again, selling strategies seems to be the highest win rate, obviously, when it comes to this. And then every time we bought something, we bought the debit spreads on, it was win, and then we bought a debit spread on a few other names, and they just always lose. And that's the general theme that I wanted to get across to people is, you have to sell and you have to be exposed to that, but we always cap it to the downside and you define your risk when it comes to the cap side on that. So let's do an overall review. Let's make that quick little shift over to the whole entire ER series itself. And so we collected all the stats that everything that came through in the entire summer ER series that we had. We threw out 63 plays. All right, we nailed 35 of them at a 55%. So that's already an edge in the market. That makes sure that no matter what, if you kept that edge throughout there 55% of the time, you win, you'll gain money off that. And what the surprising part is that even at a 55% win rate, people would probably frown on that and say, oh, that probably didn't work. Oh, that's fine. But we walked away with $2,032 per contract that you took on every single play. So if you're a 5-lot player, you times 2,000 by 5, you're walking away with 10 grand. If you're a 10-lot player, you're walking away with 20,000, and so on and so on and so on. And this is just one contract per when it came to this. So 55%, 2,000 per when it came to that. It's not bad. All right, we've had higher success rates in previous ER seasons, but I think that this is the kind of the one that has shook everybody when it came to this, because everyone expected COVID to play such a huge part on earnings, and we saw that earnings were down about 55%, but sales were only down 12% when it came to this throughout the entire S&P 500. So it's just discrepancy across the board, and it's just hard as hell to try to continue to guess and say, what, people were still buying iPhones when doing this and trying to create a play when it came to that. And I think last week's, the ER season apocalypse that happened on Thursday after hours with all of FANG that was reporting within a 10-minute time period, and it just threw the market in craze all week trying to just pin it and wait for that news to happen. That's why we went with playing off the implied moves for the 3 days prior when it came to that, and just collecting. And then that's what we told people. We said, you're heading into something that is very unheard of, that hasn't happened in a while. It's okay to take off all these plays and take the winnings on that. What actually did happen was we were running into Thursday before everything happened, and we were sitting at about a 90% win rate on the plays that were there. And if everybody took profits on that and then moved into Thursday, I would be sitting out perfect. But when that day happened, it moved a lot of things around. We took some losses on plays that were clearly sitting in winning positions, simply because that's the power of FANG when it came to that, moving it in any direction possible. All right, and that's kind of what I want to transition into next when it comes to how and why we're picking the plays that we're doing. Now, by nature, obviously, we send out the message saying that, there will never be unlimited loss potential on anything, so that eliminates strangle straddles, selling these, and selling naked entirely in general, because I don't want to throw out a play that could potentially blow up and to collect $50 and all of a sudden you're down $10,000 because you get a move that like Intel did, or you get a move that that D-Dog did, or anything else like that. So everything has to be capped by nature. So in order to make it capped, what I had to do is then I have to then play off the implied move in that. So you get some things like Roku that is implying a 13% move in the underlying when it comes to that, and you say, all right, I'm going to say that 18% move won't happen. And if it did happen, sometimes you just kind of have to take it on the chin and say, no one probably saw that because the options pricing weren't even pricing that move in. So a lot of people are getting screwed, and it's not just you, and you don't feel that, but you'll see different things that happen where people are bragging, yeah, I grabbed some deep out the money calls or puts when it came to that and I make a ton. Well, that's the extreme, you know, outlier in this case, because what right now when you run these types of selling strategies, you're the one that's profiting 80% of the time, you're the one that's profiting 70% of the time. And if you took away all of our debit spreads, all the ones that we are buying, we're sitting at that same percentage too when it comes to this. So that's the kind of theme that I want to keep going, is you need to sell when it comes to ER, and then you need to be capping it. Just make sure that random events don't just blow you up when it comes to this. And so playing off those implied moves, you know, when I'm throwing up iron condors on these names, it's always, I want to collect, and $500 is what I want to risk, and I don't want to put anything beyond that. So I move it beyond. So Roku had to then pop $30 in order to hit the top end of my strike, or Roku had to drop $30 and then hit that in order to happen. Obviously didn't, and then I collected $109 on that, made money, walked away, and boom, it was happy, and everything was good. All right. So that's kind of what I want to take home this message from. Play the implied move. Find historical supports when it comes to names. You'll find them on your charts. You'll find them on whatever tools and instruments you use. Find it, play off that, and then we have a couple big names next week. We'll still be throwing out plays, but we'll make this the official end to the ER series when it comes to this. And so follow along with those things. Test them out through weekly things. You know, you can play these weekly moves on SPY. You could play these weekly moves on Tesla and everything other things, and just simply paper trade it and see. So okay, so Tesla is implying a $250 move next week, and it's currently sitting at 1450. All right, so you sell something that's above 17, you sell something that's below 1200, and you just collect off that, because that should be deemed free money in a sense, unless some news strikes and drives it higher in a price. So try it out, see what happens. You know, come tell us what happens when you test this out. And, you know, we'll continue forward. We have next week that is going to be, 2 weeks, which is going to be August 17th. We'll be starting the $50 account challenge. When it comes to this, we want everybody to understand that this is all about contract selection and understanding your Greeks and the movement of the underlying itself. And it kind of really, you know, you're going to watch people blow this up in a day because they simply want to take out the money calls when it are put, or they're going to slowly grind down simply just based off of trying to adjust to playing smaller names. And then, you know, they're going to realize that sometimes it just moves against and you can't do anything about it. All right. But I'm excited for it. There's always great success when it comes to this. There's always a few traders that are built out of this challenge throughout the years. You know, there's a lot of people working with me on this and this whole, you know, last margin call thing that I found through doing these challenges itself. So you're going to see people that join this and do this that are going to come out in a year or two that are going to be in a position that I'm in, that other people are in, where they're the ones that are having the voice and opinions that, you know, you follow and listen. So I think I encourage everyone to at least try it. You can follow along, you can follow the results and say, hey, he can do it, they can do it, or watch me blow it up. That's all that matters when it comes to this, is how can we manage risk throughout this and then act like it's our last dollar that we have. All right, so we will see you next week when we start to get the ball rolling. We'll advertise a little bit more. We'll go over the general theme of how we're going to be playing things, because I really wanted to make a video on that. And then we'll go over, you know, contract selection, everything all together. All right, so tune in and we'll get it going from there.